So I guess the traditional model of the relationship between startups and incumbents is essentially, as General McChrystal was saying, this sort of relationship between the US military and Al-Qaeda. I mean, essentially you see each other as competitors and you're out to destroy each other. I guess more recently, companies such as GE have started to actually say, well, we can maybe be less vulnerable to being destroyed by insurgent startups by actually going out and meeting with them and having a good eye on what's going on. And actually some of the startups have said we maybe don't need to destroy the incumbent if we can actually find ways to partner, maybe we can grow more quickly. And so there's this sort of experimentation with partnership that's going on. And I want to hear from our panel a bit about what the new rules of the game are, what's working, what isn't. I wanted to start with you, Sally, because I mean, I guess one of the areas that we have an Economist conference on it. We had one last year, we're having one this year on fintech, this whole notion that finally Silicon Valley is really taking seriously the possibility of disrupting the mainstream finance industry. And I wanted to get your sense of how, as one of the incumbents, you're looking at that. Do you see, how do you evaluate the competitive threat, and how do you see the role of partnership in, with some of these upstarts being part of your survival strategy or growth strategy in the future?
Yes. Well, it's interesting. If I think back, say, 10 years ago, financial services companies, including JP Morgan Chase, looked at PayPal and spent a lot of time debating, are they a friend or are they a foe? They're a friend in the sense that our credit cards and debit cards were being loaded into PayPal wallets, but potentially a foe in that PayPal actively steers consumers to shift the method of payment from credit cards with interchange revenues to ACH payments, direct debit from a checking account. And so there was this friend or foe debate. And what we didn't spend nearly enough time thinking about is, why are our customers using PayPal? And what is it that PayPal's offering that our services don't provide, and how can we satisfy that consumer need? And so the approach we've taken over the last several years is to very much focus on studying what's going on in the fintech ecosystem. And the way I think about it, every startup in fintech that's getting any traction at all has identified either friction in the customer experience in traditional financial services, or an unmet customer need of some kind that's being addressed. And it's incumbent upon us to understand what's appealing to our customers, and then think through, as I say, how we can bring that or a better experience to our own customers. And that could be, we might end up building that capability ourselves. It might be a matter of acquisition of one of these companies, or it could be, we could affect that through partnership. And increasingly, we're finding, as you know, most of the fintech startups focus on a very narrow slice of financial services, so lending to small businesses or person-to-person payments. And because they have that very narrow laser focus, they do an incredible job perfecting whatever that experience is. And what we found is that the thing they don't have, they have a wonderful customer experience. It's very difficult to develop a consumer brand and actually acquire a large customer base. Obviously, a bank like Chase has customers and an established brand. And so many of these companies, or some of these companies, are beginning to pivot their business models to focus on enterprise solutions and really serving large financial institutions like ours, and bringing that great customer experience on a white label basis to traditional bank customers. And so in that case, partnership can make tremendous sense, because the business model is typically developed specifically for that white label purpose. They're not a consumer-facing brand that's actively competing with us. And they tend to be very attuned to all of the regulatory and control concerns that financial institutions have, so they're sort of purpose-built to integrate with our infrastructure. So we found in several of our businesses, partnerships can be very fruitful.
And Brad, you're an entrepreneur. I guess there's something about this sort of disruptive, taking on the incumbent kind of mindset that's, in the sort of modern heroic entrepreneur model that America loves. That's the vision. I mean, how partnership seems a bit soft and wimpish by comparison. Collaborating with the incumbents and everything. How do you view it?
Well, I'm 46, so that makes maybe I'm over the hill for the war of entrepreneurship. Our business is in the world of predictive insight in major industries, major global industries, heavy industries like rail and construction and aviation and water, stuff like that. And the opportunity to affect change and at the same time build a company with speed is one we could take it on independently and try to disrupt from the outside, which is more our method of building. But I think I've reached a point where it's a more evolved appreciation for how to build a great company, and we've really created a model that I would refer to as collaborative disruption versus just blunt disruption. And the collaboration aspect enables us to really do what we're built to do, which is create value and solve big problems. So when the opportunity is to use predictive insight to reduce or eliminate unplanned downtime, for example, in locomotives, which is a huge benefit to global trade and to profitability of railroads, or if the opportunity is to optimize performance around efficiency of things like water provision, or wastewater treatment, and or on-time projects, or if the opportunity is around safety and regulatory compliance on a mass scale, you can try to create something without any relationship to major incumbents, or you can have what I think is a much more evolved approach, which is collaborate. And what that brings to a huge, iconic company in one of these spaces is this DNA of entrepreneurship that often is a very positive provocation internally, and at the same time, it leverages their knowledge of the industry. It leverages their data, which is a very important asset in 2016, only getting more important every year from here. And I think it lets us collaborate to do what we both do best. Our partners at Uptake in different industries have phenomenal data, have amazing insight, and have global reach, looking to create value for customers. And at Uptake, we're very focused on speed, quality, and productization of technology as a service. And those are things that are not necessarily the core attributes that got some of these heavy global industry players to where they are. So we're able to do what we do best, and they do what they do best, and I think it's a winning formula.
We'll come and talk about some of the cases that you've been involved in shortly. But John, tell us a bit about the new model that you're developing around universities partnering with companies to help them innovate.
Well, higher education is being disrupted right now by the markets, as well as by students and faculty. An increased number of faculty and students are very interested in not just scholarly activities, such as publishing a paper or presenting at a conference, but also to take that idea and bring it into the world. And often they're trying to find a way to do that through commercial channels. So the Chicago Innovation Exchange was born 2 years ago to try to provide space, capital, mentoring, access to VCs, connection to the marketplace on one end of the exchange, and then on the other end of the exchange, make it more streamlined and straightforward for industry and the ecosystem to engage. We've noticed that for entrepreneurs to be more effective at presenting well to companies to collaborate with, they need to better define what it is their value proposition is. And if you look at the historical model of higher education and even large research enterprises, it was very inwardly focused, very ivory tower isolated in many respects. And to some degree, that was okay and remains okay in certain areas of basic research. But an increased pressure comes from government grants not being available to do this type of work, as well as this rising interest by our millennials to move forward and start something. They equate entrepreneurship to empowerment. They've lived through the Great Recession. They want to develop their own Swiss Army knife. I mean, I see students coming through. We've got 2,000 members and growing rapidly. Students coming through every day believing that what they can do to impact the world is going to be more meaningful if they can start a business or move themselves forward through the channel of entrepreneurship. We provide that support system to be able to do that, but we also introduce sobriety. Having been a long-time entrepreneur myself, I know that there are many joys in the journey, but there is an equal, if not greater, number of sorrows and pain and setbacks in the process. And so introducing some sobriety in the process so that at the end of the day, the CIE is coalescing people with technologies in a format that creates business concepts that can get to market so that they can be useful fintech companies to partner with a JP Morgan, or a genetics platform that can partner with AbbVie, or a new drug idea that can move forward in the marketplace to be appealing to a large venture capitalist. That back in the day, you'd have professors and students believing that all they needed to do was discover a new molecule at a milligram scale and think that Pfizer would show up with $1 billion check and it would be over and they'd be rich and happy. It doesn't work that way. It may have worked that way back in the day, but not now. And so we're being very proactive. I think we're on the cutting edge of building a new model, but we're not alone. You know, if you look at our peers in the marketplace, there was a great story in the New York Times a few weeks ago about the arms race in innovation in higher education. And so everybody's trying to figure out their own new model as a reaction to a marketplace that's demanding these types of technologies and individuals that are bringing them forward so that they can be disruptors in their larger universe. And at the same time, you see this, this greater organization toward the ability for large institutions to remain relevant. They have to be able to attract and retain the best faculty and students, and the fact of the matter is, more of those individuals are only going to a university that they believe has an entrepreneurial ecosystem, that they can take their scholarly activities and commercialize their innovation. So partnership is critical for us, not just in terms of companies interacting with the venture community and large corporations, but even the CIE itself. So we don't own all of the talent. We have a great intellectual base at the University of Chicago, but we're open partnering with other places that do things better than us. We have a very important partnership with the University of Illinois in Urbana-Champaign, top 5 engineering program based in Champaign, but they have a lot of talent that would like to live, work, and play in Chicago. The CIE is a great place to partner with Booth students, again, top 5 business school, in an ecosystem that is emerging and arising. And so I think you'll see that type of model replicated in other urban settings and other universities across the country.
So I'd like to ask each of you to just briefly describe your signature partnership, one example that you feel particularly indicates your approach, and maybe talk a bit about what it was, what was the biggest challenge you had to overcome to make the partnership work. And we'll start with in reverse order, John.
Well, I would start with, we manage at the University of Chicago, we're the contractor for 2 national laboratories, Argonne National Laboratories and Fermilab. There's a wealth of innovation happening in those government laboratories, but they're remote from the city. They are behind barbed wire. Innovation is happening within the walls, but in great isolation. Like universities, though, they're determined and being pushed by Department of Energy, their primary funder, to move these ideas into the world. And they've got scientists, and they've got 500 postdocs that are chomping at the bit trying to bring these ideas to the world through commercial channels, and yet they don't really know how to do it. And it's complicated not just in terms of how do you validate these technologies, particularly in the hard sciences that have special challenges? Regulatory path is long, high failure rate, capital intensity, and they usually center around intellectual property. And that's always a hard thing, especially in this new age where open source is becoming more important. And it's very difficult to get the old kind of regime to break down their barriers and look at things in a new way. So IP is always is an area where we have to focus. One partnership we established, both with the University of Chicago and Argonne, is called the Joint Center for Energy Storage Research. And it's a new model. It's a 5-year, $120 million grant from the Department of Energy, but several partners from the corporate world, Exelon being one, as well as Johnson Controls. New intellectual property model where all partners have non-exclusive access to the technologies that they are co-developing. But the whole idea of this J. Caesar initiative is that new next-generation batteries will emerge, and the companies that were part of that partnership will be effective at being able to move those to the marketplace and apply them in disparate industries. And so getting that model to work and then working on it every day, I think,
Well, I presume the biggest challenge was agreeing how you're going to slice up the cake
who owns
when you own the IP.
Yeah, who owns what and how are you going to do it? And then there's a lot of energy I find around press releases. We just did this partnership, but the reality is the hard work begins after the press release happens. So you have to work on it every day, making it happen, translating the idea into a marketable concept.
Brad.
Well, the partnership that we announced publicly is with Caterpillar, and I would both talk about it directly and then abstractly, but I'll start with abstract. It solves a problem that we're seeing in many of the industries that we're playing in, which is what I call the it's not the innovator's dilemma, it's the industrialist's dilemma, which is that these major industries have been built in terms of the infrastructure of the industries themselves. They've been built on making machines, servicing the machines in the field, and then selling parts. And the opportunity, and there's been tremendous innovation in each of those aspects, supply chain efficiency and manufacturing automation and all kinds of, and part efficiency. But in terms of providing value to an end customer, the last frontier was really around insight and analytics and optimization. So, and I believe that those major players in the infrastructure of these industries who don't take that seriously are at risk of pretty grave consequences for doing so. So that's the dilemma. What do you focus your resources on? Continuing what is a very profitable and fantastic business, or building the technology capability to utilize data science to provide insight for the end customer. And it's very hard to do both at once. And that's...
It's interesting. I mean, GE is basically, you mentioned trains running on time and things. They've invested in becoming a software company, if you believe their advertising. And that's obviously a massive transformation for a company like that.
Yeah, so I'll speak to Caterpillar. Caterpillar has made the decision to collaborate with Uptake and solve problems around trains running on time and fuel optimization and predictive maintenance versus reactive maintenance and many other use cases. And we're doing it with Caterpillar in the rail space, in the construction space, in the mining space, among others. And the advantage of the speed that we bring, the technology focus that we have, the talent that we're able to assemble with a very focused mission of building solutions around predictive insight. The advantage of combining that focus and that speed with the expertise and the insight and the data that Caterpillar's developed in their iconic history is a pretty special way to solve
You think that's
the problem.
a faster approach than maybe the GE approach? Or
well, not comparing to anybody else, I just would say on an absolute basis, I think what we've created with Caterpillar and other companies, is a pretty unique model. And that model is a new flavor of entrepreneurship in which, the entrepreneurs, rather than running around the outside and trying to find a way in, go right to the inside collaboratively and create business models where both parties can win and where both parties are uniquely advantaged. And granted, we found a space where that synergy really works well. It's really a 1 + 1 = 3 or more, But if you can find that opportunity to take the major iconic business with the energy and passion and focus and speed of a startup, everybody's better off.
So what was the biggest challenge you had to overcome to get that to work?
Well, building companies is not easy. So everything about it is it's challenging, but it's worth it.
But the partnership,
I love it. So it's what I love to do. And the partnership challenge, if I had to rank them, one of the highest challenges is probably cultural. But by being very clear about the objectives of why the collaboration exists, very clear about what value it brings to the customers, which is really, our customers, Caterpillar and Uptake collaboratively are delivering value to the customer, who is the owner of these assets, the railroad, the contractor who owns lots of different pieces of machinery. And so by focusing on that and letting the culture sort of blend in service to value to the customer, it can be solved. Yeah.
Sally.
At JP Morgan Chase, we have a number of commercial partnerships underway, which are not yet public, so I won't speak to those. But I would mention a partnership we established about 1.5 years ago as part of our philanthropic work. The JP Morgan Chase Foundation partnered with the Center for Financial Services Innovation, led by Jennifer Tescher here in Chicago, on a partnership we call the Financial Solutions Lab. And the objective of the partnership was to fund and support entrepreneurs focused on fintech solutions that improve the financial health of Americans very broadly. And the way the Solutions Lab is structured, each year there is a competition which focuses on one specific challenge facing Americans, and particularly low and moderate income Americans. The first competition focused on managing cash flow, and the competition for 2016 will focus on weathering financial shocks, very related. And interestingly, just to put together the pieces of the puzzle, there are many dimensions of the partnership. We've launched fairly recently, about 1 year ago at JP Morgan, something called the JP Morgan Chase Institute, which is a research activity committed to using the data assets of JP Morgan Chase to inform broader economic and social policy decisions. And so, as you could imagine, given the breadth and scope of our consumer businesses, we have tremendous insight into people's financial health through what we see going on in their checking and savings accounts, the transaction activity on their credit cards and debit cards. And what the Institute has done is to create a panel, effectively, of Chase customers who concentrate their banking business with us, and can look at that to really see what's going on in a very micro level, but not on a survey basis, really looking at actual financial flows, and looking at things like the match or mismatch of income versus expenses, looking at volatility of cash flows and how people manage through that. So we've used that research capability to inform what are the biggest challenges, what should the competition be focused on. We then launched the competition in partnership with a number of both community partners, advocates, and other experts in technology and design. And as part of the competition, the winners of the competition are provided not only capital in terms of a grant, but as well technical support. So there are mentoring opportunities, networking opportunities. We actually sponsored a forum in DC recently with the winners of the competition with our regulators to understand better with the regulators' perspective on fintech and how they could better navigate the regulatory challenges they're facing.
But you were mentioning backstage a partnership with On Deck Capital, which
yes,
is another. I mean, it's actually one of these genuine,
Commercial
upstarts. And just tell us a bit about what that is very briefly and what you had to do to make that work.
Sure. So in that case, it's interesting. I'd say there are a couple of ways partnership opportunities can come to us. I would say a lesson we have learned is that it's important to think first or start from the strategy of the company and the needs of our consumers, and really take a broad look at the landscape to understand what fintechs are in that space, get to know them, do a broad assessment, and then narrow in on a select partner with whom we move down the road to an actual commercial relationship. I think we've learned the hard way that when you wait for entrepreneurs to come knocking on your door because they're in the middle of an investment round, there's usually a time constraint, there's a flurry of activity, and at the end of the day, you aren't really sure, you don't have the time to ensure that this is the right partner. It's just the partner that's there with a sort of a ticking time clock. In the case of On Deck, we had done a broad piece of strategy work with our business banking colleagues, looking at how we currently serve small businesses and how we could improve that. And one of the things we found, a real pain point for small businesses broadly, is the need for short-term funding for working capital, and particularly for very small businesses who are looking for small dollar loans less than $250,000. The traditional bank process is very paper intensive, can take days or weeks to get to an approval. We've learned from surveys that small business owners typically apply for loans to 3 different banks, knowing that their odds of getting approved at any one are limited, and spend in total 33 hours on that application process. Terribly cumbersome. And if all you want is, in many cases, financing for incremental inventory to support a promotion, as an example, it just doesn't make sense to invest that kind of time. So what On Deck and a number of other marketplace lenders have done is to create a purely digital version of that loan application and approval and funding process. And what we've done, the nature of the partnership with On Deck is really a technology licensing agreement in many ways. We will be white labeling On Deck's technology to provide that terrific digital, immediate decisioning, fast funding experience for Chase customers, Chase small business customers. But the actual underwriting criteria will be Chase's, and the loans will be on our balance sheet, and the branding will be Chase. So we'll be proactively offering these loans to our customers beginning in 2016.
So what's in it for On Deck at this point? I mean, because they're a company that talks disruptively.
Absolutely. And at some level, they are a competitor, of course. What's in it for On Deck is 2 things. One is certainly a steady flow of licensing revenues. So it's an alternative. They view themselves first and foremost as a software company, and so this is consistent with that model. Yes. And as we work together to implement the partnership, I think On Deck would say, while there was a lot of work that had to be done to meet all the requirements, data and privacy and security and regulatory compliance and so forth, that JPMorgan Chase required, it made them a better company. And so at the time we partnered with them, they were already a public company. They had some infrastructure in place, but I think this enabled them to get to the next level in terms of the quality and sort of scalability of their business model. We were joking earlier, the one thing the CEO of On Deck mentioned in a recent conversation was he now has a pandemic bird flu policy, which was required to be under our third-party oversight requirements, which maybe he doesn't need, but it has brought a great deal of professionalism, I think, that they very much appreciate.
So we'll go to questions in a second.
And so it often, at least in our space of predictive analytics, this is really important stuff, but it's also threatening to lots of people. And so it's important that the CEO of both companies are articulating definitively that this is critical activity, and therefore the cultures have to find a way to work
So
together.
at Caterpillar, it was the CEO that was there involved as well, was it? Interesting. One more. Have we got another question?
And just to build on that too, I think talent likes to be at the edge. They want to be touching the market, and that's where you're learning the most. I think you can create a dynamic culture when you are interacting either whatever that market is, whoever the buyer is, whoever the investor is. And I think young talent in particular is very motivated to be part of shaping, as I mentioned before, their own future. And so creating a culture, whether it's a large company or a small company, that puts the leader, the talent that's developing themselves in front of the customer early in the process, just like we're doing in our model at the CIE in terms of putting the professor in front of 30 customers to tell that professor whether their idea is just a great discovery or a product that could actually be used in the marketplace, or maybe how they need to pivot and move that product downstream if they made some of the changes that the market is talking about. So I think talent likes to be exposed to the market, and you're always going to get the best talent if you can create a company, a culture, or an enterprise that allows you to bring in that type of genius, as Brad points out, that's facing and interacting with a customer, because that's allowing the company and the individual to grow all at the same time.
Great. Well, unfortunately, we're pretty much out of time, so I want to ask each panelist in finishing just to give one piece of advice to anyone who is thinking about, in a big company, thinking about whether they should be partnering to accelerate their innovation process. And we'll start with Sally.
I think it's incredibly important that we all be students of what's going on in the broader Silicon Valley community to understand both really understand what's possible. Many times we don't know what we don't know. And so I would strongly encourage everyone to be students of the ecosystem.
Brad?
My piece of advice or request would be, if you're interested in collaborating, email me. Brad@uptake.com. Very easy.
Shameless sales pitch there. Lastly, John.
Yeah, I think that what I would emphasize is if you're creating a partnership, manage it like it's a true business extension. And in that, if you want to create momentum in a partnership, make sure that you have transparent communications. So one thing we learned early on in our process is that it's much more likely that an idea can become commercially validated if you've got momentum. And the more opaque a process is, how do you get a license? How do I manage my internal team so that I'm being rewarded for doing this type of work? The more opaque your process is, the less likely your product's going to make it, and the less likely a partnership is going to succeed. So transparency is very critical in your communications.
Great. Well, I'm going to hand over now to Alexandra and thank the panel very much for a very stimulating conversation. Thank you.